Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, September 25th, 2013. And in this video, I'd like to go over the Nasdaq 100 and its tracking ETF, the QQQ, as well as the top 10 holdings. Wanted to take a quick look at the charts on those holdings. And the reason I like to do that, I keep a watch list on my screen at all times of the top 10 holdings in the most of the major indices, but especially the Qs and the S&P 500. And the QQQ in particular is a very top heavy weighted index. For example, the top 10 components of the QQQ slash NDX right now represent or make up over 44% of the total returns or weighting of that index. So in other words, the top 10 stocks out of an index of 100 stocks represent nearly half the returns. And if you go down to just the top 5, take a look at the top 5 holdings, you're looking at almost exactly a 1/3 weighting. As of my latest numbers, 33.37%. So the top 5 holdings in the NDX make up 1/3 of the performance. So let's take a look here real quick at the NDX itself. This is a weekly chart. And we had this large, along the way, there's several uptrend lines which have been broken. And if you look at where each trend line was broken, you do see prices did correct. We had a correction back here. On this trend line that's highlighted broke, we had another nice sharp correction. And then more recently, earlier this year, we had this yellow, very well-defined trend line break. And at that point, we had some long-standing divergences. And we did have a lot of short trades here. And I'll admit I thought this one was going to go down a lot more. The charts had projected, at least my take on the charts, said we would correct more than that. We did hit some of my earlier targets, but my final targets were never hit and actually still remain in place. I still believe that prices will probably come back in below these earlier, I should say late 2012 lows. I was referring to the correction in 2012. So since then, what happened is prices have set up in this smaller but still well-defined rising wedge pattern. We've recently had an overthrow of that wedge, as I talked about, and on some of the static charts, I believe on the QQQ. And most importantly, divergences have persisted. This is the PPO we're looking at here, price percentage oscillator, which is very similar, almost identical to the MACD, the RSI below. So as you can see, from going all the way back to really the beginning of 2011, the NDX has been making higher highs with just about every indicator and oscillator making lower highs, i.e. negative divergence. So I still maintain, I believe that, I know we only have a few months left in the year, but I think by the end of 2013, no later than early 2014, we'll probably be looking at a pretty sharp sell-off in the market as these divergences play out. Is it possible that they are burned through, meaning prices move up above these trend lines and more importantly above these previous reaction highs where the PPO peaked and the RSI peaked? That's possible, but from my experience, pretty unlikely. So let's go ahead and move forward. Take a look real quick at the QQQ, a basically identical chart, of course, the tracking stock. And I put this chart up in the blog, but as you can see, these divergences, again, if you just follow the horizontal line, my vertical line on these crosshairs, where these divergences were actually confirmed, meaning the indicators rolled back over, looking here at the PPO, you see sharp corrections have followed just about, well, in every instance here so far. It's not drawn here, but I could draw a line from this peak in the PPO to this lower peak, which I did have on the charts earlier. That marked that divergent high from this peak here to here, and of course a very sharp correction. So I have really no reason to believe that that prices aren't going to come back down to at least this uptrend line, and I imagine we'll find a support on that line on the initial touch, but I do think prices will go quite a bit lower, especially considering the scope of these divergences that are now nearly 2 years in the making here. So I think we're looking at a sizable correction in the very near future in both QQQs and the remaining U.S. indices. So, all right, let's dig into the top holdings, starting with Apple, which is the largest holding in the Nasdaq. It used to have a considerably higher weighting. At one point, it was as high as 20, even 25%, I believe. And as the latest numbers I'm seeing, Apple's now makes up for about just over 12% of the QQQs and the NDX. This is a weekly chart we're looking at. Let me just zoom out to a six-day period chart. What's interesting to note, in the correction that we've had in Apple recently, let's put up some fibs. We'll go from this low all the way back in 2002 to the peak over here in 2007 before the bull market ended. And if you look here, right on the button here to the left of the screen here are the fib numbers. So this is a 61.8 Fibonacci retracement line. That's where that previous bear market in Apple ended. And so far, let's just put the highs up there. Let's move the lows on where that prior correction ended. And if we zoom in a bit, you'll see that so far Apple has made a correction and found support not once but twice on the 50% fib, which is a common fib area to catch support. So whether the bear market in Apple is over or not, my personal opinion, I don't think it is. I could sit here and talk for hours on some of the fundamental reasons why I think the company has seen its best days. But with that being said, I don't have a very strong opinion, and that's why Apple hasn't been listed as a trade idea in the blog in recent weeks. We're still looking at the PPO here in bearish territory. We're tempting across of the zero line. You typically have a bear market when the PPO or MACD falls below the zero line, and we're just slightly above it now, although the lines are curling down. So something to watch. Either way, I'm staying away from Apple at this time, but it is worth noting because it is again the largest component in the Nasdaq 100. This is a daily chart. It's quite busy, a lot of trend lines that I have here. I haven't cleaned this up for this video, but typically you have downtrend lines. When downtrend lines are broken, as they were here, that's bullish. This is the most recent uptrend line that I've been watching, and I was watching this resistance level back here defined by this gap back from early January 2013. Prices ran up, hit that level, stopped, came back down, and had a very impulsive break. If you look at the price action, this is what the markets will do. It'll trap longs. Longs were probably looking at a tag on this trend line, this uptrend line that started off the lows back in July, as a place to go long or add to their positions. But what does Mr. Market do? It gives you a nice fat gap down to just trap the longs in there and really not give the shorts a good entry. But since then, prices have powered back up. But the momentum is certainly waning right now in Apple. And again, until we can take out these previous highs, right now Apple is on breakdown mode as it broke below this uptrend line. And again, I don't have a very strong opinion on the stock, so take that for what it's worth. Let's go ahead and look at number 2, Mr. Softy, coming in at about 7.5% weighting in the index. And on Microsoft, we're going to study the weekly chart. This is something I've put up in the blog in the past, and I focus on this resistance zone. The resistance zone is defined by two close resistance levels, as these white lines show, and this goes all the way back to the prior bull market. And back in 07, we were knocking at the bottom of that resistance level. And then we had one final stage buying climax where prices broke out to new highs. A lot of cheerleading, I'm sure, at the time on TV and in the media. And that proved to be, as often is the case, on a blow-off top. That was the final stage bull market move. Sucks in the dumb money. There's a lot of euphoria, giddiness with a breakout to all-time highs, and then boom. And we all know what happened. So prices then came back up, back tested the level again, back tested here, tested the resistance zone here. And more recently, let's fast forward to what's going on here. We've had a couple tests, and then what looks very similar, if you look at the move, a near parabolic run, and to break out of these multi-year highs. We haven't seen these highs since the previous bull market, and that's what's happened in Microsoft. But where was the follow-through? There wasn't any. In fact, let's take a look. What I'm really focusing on this chart is the RSI and how overbought Microsoft gets. Again, we're looking at a weekly time frame, so this is the RSI 14. And if you'll just follow the vertical lines, I'm going to put my crosshairs, excuse me, I'll place the crosshairs where the RSI, once it became oversold, which you really want to see, or overbought, I'm sorry, when the RSI becomes overbought, that in itself is not a sell signal. In fact, in a strong trending market, our RSIs can stay overbought for quite a while. It's that move back below the overbought reading. And so that happened here, and if you follow the vertical line straight up to price, you see the sharp correction that followed. Again, here we were overbought, and what we'll often see is prices will come back in and then go back to make one other overbought reading, which we did right here. So let's put the crosshairs there. And again, look at the landslide in the price following that second lower low in the RSI. Here we had another overbought reading. That in itself, as the other ones did produce a nice correction once we crossed back below 70. And then what happened? Prices came back up to make a near test of the 70 overbought level again. Once again, a lower low in the RSI, and boom, look at the price action. Microsoft sold off very, very sharply, had a sharp correction. We haven't seen those readings again until 2012. Same story. They crossed below zero. They even came back, crossed below 70, came back to make another near test, and then boom, nice correction there. So you get the point. And here was a lower, much lower low in the RSI, and that triggered that correction. But once again, here we are with Microsoft recently coming back down below rarely seen overbought levels. And we even had, if you follow the little finger here on the cursor in my hand, that we even had another test to come back up and test the 70 level there, right about here. And we did get a very sharp sell-off. Now, the only thing missing from this price action is a sell-off to the extent as most of these other big sell-offs that we've had in the past. So whether this proves to be a big fake out, whether these overbought readings continue to play out as they have in the past, that's yet to be seen. But I would be very cautious chasing a breakout of Microsoft to these recent highs, which in fact they're failing right now. We're coming back down well below the recent peak. And once we get below this former resistance, now support zone down here, then things can get ugly. And I would expect the selling to accelerate if and when that happens. So that's Microsoft. Google, I just wanted to focus. It's been a little while since I put up a Google chart, but if you reference pull up any of the previous Google charts on the site, or the last one or two that I posted, I believe I showed these Fibonacci fan lines. These are drawn off this low back in late 2012. I put the first fib fan line on this. I have an uptrend line underneath there. It's hard to see. There's a white uptrend line, and then you have your 38, 50. And 61.8% retracements or Fibonacci numbers there. And you can see, as I pointed out before, how well prices have really played off these fib fan lines. We had a breakdown of the first fib fan line there. Prices came down to find support on the 38% fib. Made a brief pierce below, actually all the way close to the 50%, but just whipped right back up. That was a very brief whipsaw or false breakdown, and then prices rallied up to almost kiss that original trend line / fib line there, came back down and found for months support again on that 38 fib. Finally we had a breakdown, and if I'm not mistaken, last time I posted this chart we were still in here. So we broke down, came and back tested it, and then I think we were right about here last time I posted it. I'll have to check. And expected a breakdown, which we did get. And once again, these lines are like magnets, or at least they have been playing out that way so far. We had a breakdown, prices came back up to back test that line from underneath, could not get above it, fell back, came back up again, have been riding up underneath, and have now started to roll down. So if these continue to play out, and again, I don't put too much stock in any one single indicator. It's just something to notice, something that's been working well. But if you were to trade Google short, you would expect the next resistance, at least according to these lines, to be on this 61.8 fib line here. And of course, I would add, at the time, I would look at horizontal levels. I would put this horizontal line that I'm showing you here with my crosshairs. That's a very nice support level. In fact, I should add that to my chart now. I say that because we have, sorry folks, let's grab the right line here. Okay, there it is. Okay, we have this reaction high, reaction low right here, and another reaction low. So there's 3 points, one from below, two from above, and my guess would be if Google did have a sharp sell-off in the upcoming weeks here, or well, we're looking at a daily chart, so take a few days, but this would be a great support level to either cover a short or even go long if you want to take a counter trend trade and try to play a bounce on Google. But if you look down here on the MACD and RSI at the recent highs that Google put in, which we've yet to surmount, like a lot of the broad indices have broken out to new highs, Google actually peaked way back here and had pretty steep divergences in at the time. And these divergences have been and continue to play out as prices are still well below those highs set back in late July, it looks like. Okay, this video is going longer than I had hoped, which is often the case. So I'll continue to talk fast. I'll just get through these charts a lot faster, a little less detail. Here's Cisco. This is a key uptrend line going all the way back to the lows here in August, almost touching those lows. But Cisco has been, had these smaller patterns above there. We've been in an uptrend, but the momentum is clearly weakening. We had these divergences back here in early 2013, which played out and for a nice correction. Then I was tracking these divergences that we've had since early June, with prices from this point to this point making higher highs, and the MACD and RSI making lower highs in negative divergence. Well, those divergences played out quite a bit with a nice gap down, and they may have more to go. As of now, support is support until broken, so this is a key uptrend line. If you were leaning towards the long side right now, sure, you could go long here right off this support line with a stop not too far below. But again, I'm doing this overview to really get a big picture of the index and where we might be going. So if you watch all these charts, watch these support levels that I'm talking about, like the previous one just mentioned on Google with the fibs, Cisco here with this trend line. If you start to see these leaders break down below these levels, these are key technical levels, and that would tell me that that we have more than likely begun a significant correction, if not new bear market. So Cisco, and let's take a look at the next one. This is Qualcomm. Gosh, this one, again, I haven't cleaned these charts up for this video. I just wanted to make sure I got it out today. I've had quite a few other things going on. These charts have been posted on the site. You can reference this by pulling it up under the ticker by post by ticker function on the right-hand side of the home page. But this, as of now, right now on Qualcomm, we're looking at a daily chart. Here's a nice uptrend line, wedge pattern, divergence, at least on the MACD, not so much on the RSI because we did make that higher high there, but on the MACD we have some negative divergence, or did have that at the top. Qualcomm recently broke down, nice impulsive breakdown. Prices are still just under that wedge, so that could be an objective short. Either way, I have that stock on a technical breakdown at this point in time. Also note, if you look at the crosshairs, look at the horizontal line going back to this previous high. What we saw here, this was a breakout. Let's add that line just for reference. Okay, so we broke out to new highs and then failed, and now we're underneath those highs. So far that is a failed breakout, i.e. bull trap, unless prices can get back up there, especially take out those recent highs in Qualcomm. So for now, the stock is on breakdown mode in my book. Intel, this is the number sixth largest holding. And this is a long-term chart. I'm looking at a 6-day chart, which spans similar to a weekly chart. We had this long-term downtrend line going all the way back to 2003. Prices broke above that in late 2011, which was bullish. We had a strong move. They came back down and actually fell back below that and found support here. So I have this horizontal support level. This chart is a little conflicting or confusing. We have this uptrend line here off the 2009 lows. Now I'm putting a little more weighting into this because this is the most current uptrend line, and we're seeing some reactions off there. In other words, we had an uptrend line there, first reaction, second reaction. We had a breakdown at this point. Prices found support, came back to make a back test of that uptrend line, a successful back test, and then failed, reversed, or moved back down off there. So like I said, a little bit of a mixed picture from a longer term perspective. Intel, I'll tell you, as far as the top 10 holdings, probably looks about as good as any right now. I have this uptrend line, more recent uptrend line. We're on a daily chart now, folks. And this goes back to late 2012, this uptrend line, several touches, 1, 2, 3. So let's just keep an eye on that. You may want to put that line on your chart. We had a downtrend line here, which Intel recently broke through. So currently the near-term trend is without a doubt bullish ever since we broke out of this downtrend line. And we'll have resistance. There's quite a few resistance levels. Again, I haven't marked these charts up completely, but these are lines I've been following. And if and when Intel breaks below this uptrend line, I think, again, we'll probably more than likely be in a confirmed downtrend at that point on the Qs. Here's Facebook, who finally made it into the top 10 holdings. I think this is position or weighting number 7. Nope. Looks like number 6. I'm sorry, so Intel must have been number 5. Let me see if I have that right. 1 second. Oh, yeah, it's number 7. Okay, so this was Facebook. As everybody knows, you can barely make it out on the left of this chart. There's one candlestick here. This horizontal line marks the peak that the stock hit on the day of the IPO before falling off like a cliff. I had predicted back then. I called it Facebook would do a face plant. I had a price target shortly after in the mid-teens, and we did come down and into the mid-teens, so about 17.5 or so. And since then, Facebook, I haven't had a lot of trades on the stock. I've just been watching it, especially as of lately. But that stock was added as a short setup on the site today. I actually took a small starter position, and what I'd like to see is prices come below. These annotations are moving, but we have this gravestone doji yesterday put in. See if we zoom in here. If I stretch the chart, it sort of distorts these candlesticks. So let's see what happens. I'm not going to get too heavy into Facebook until I see prices close below this yesterday's candlestick. But if that happens, my next add-on would be under this wedge or uptrend line here, the bottom of the wedge. We had this one very brief, very powerful but sharp, breakdown of that uptrend line. And as so many patterns, I can't tell you, if I had a nickel for every beautiful short setup that I've seen in the last few weeks, it did this, triggered an entry, and prices came and sucked back up within there. On face value, that's bullish action, but again, I've made a case. There's really no volume behind this move. I think a lot of this is short covering. This market just doesn't seem right. We know it's a unnatural, manipulated market now, but again, I'm skeptical of these recent moves to new highs on a lot of these stocks, and so I think if and when we get a reversal on Facebook, I think this one can come down fast. And the target is, quite a bit below. We're talking 10 points on 50 bucks. That's about a 20% drop right there to the first target, which I think has a good shot of being hit, especially if and when this trend line breaks. That's Facebook. eBay, not much to cover on eBay. I'm jump back over to a weekly chart here on eBay. We're looking going all the way back here to early 2005. These previous highs are all-time highs in eBay, and the stock is just now trying to challenge those highs, or has been actually for most of this year and even a little of last year, and has yet to take out those highs. I have two different trend lines I can draw depending on whether I hit the bodies or wicks on some of these candlesticks. Either way, I have prices below both these uptrend lines, which come in all the way off the 2009 lows. So eBay has broken below its bull market uptrend line, failing to get through those new highs. And overall, not one that I'm interested in shorting, but again, it plays into how the QQQs are looking overall with these top holdings. So right now, that one's not looking too hot. If and when maybe prices want to consolidate here, make a consolidate for a little bit to build up the energy to make a sustained breakout of those highs, and that of course would be bullish. So it's just something we'll have to watch. Texas Instruments, TXN, same story. Here's a stock trying to challenge its recent or multi-year or possibly all-time highs. I haven't. We can look real quick. No, had back in the bubble, Texas Instrument in the tech bubble in 2000 went a little higher. So we're looking at multi-year highs, and the stock did just break through. Not a lot of follow-up. I've removed the volume off these charts just to clean this up for the video. You can only fit so much on these video formats on the YouTube that I use. So let's take a look. Something that I haven't added here, but I'm noticing now would be this uptrend line here. So that's something to watch. And again, this isn't a very impulsive breakout, but as of this time, Texas Instruments is trading at new multi-year highs or just off those highs. However, let's zoom down to the daily chart, and then this doesn't paint a very bullish picture in my opinion. Let's just focus on this most recent rising wedge. We have a pretty clear rising wedge pattern, very clear negative divergences in place. As prices are making higher highs, I can see the MACD rolling over here. Really zoom in here, you can see we're about to cross, and in my book that confirms the divergences. In other words, until I see that fast line cross down below the slow line, it's only potential divergence, and that's, at least in my book, that's when divergence is confirmed, because now we do have a lower peak or a lower high in the MACD against a higher high in prices. So again, I've been trading wedges for years now, and more often than not, you get a bearish rising wedge like this with divergences, clear divergences on the MACD and RSI. You're going to have a breakdown, and prices are going to go lower. And that's an excellent first target, the $38 level. You have this price support back here, several reactions in the bottom of this big gap. So for those of you interested, I don't have this as a trade idea on the site, but that would be my target and your entry. Aggressive traders could take an entry here at the top of the wedge, near the top of the wedge, although prices might want to make another thrust higher with an official entry or an add-on on a break below the bottom of the wedge. Okay, for those of you still with me and awake, congratulations. This is the last stock here, Baidu. Weekly chart we're looking at. These are trend lines that Baidu has broken down and played off of before, ridden up these trend lines. And we had this large wedge type pattern on the weekly frame, which prices broke above back in, it looks like July. That's a bullish move. Now, I'll tell you, if you measure the wedge, let's just do a simple measurement. You take pretty much you want to look at the distance of the widest part of the wedge, which would be this. It's just a quick measurement. And you add that on, that would be your technical projections. So maybe Baidu has a little more to go, maybe not. I can see the stock is overbought, but again, that's never stopped it before. I do see the PPO starting to roll over here, and more importantly, let's take a look at the daily chart and see how things look. Now, this to me is an unsustainable move. This is a near vertical rise with a wedge. And if we look now to the more recent highs, here's the highs from back in early 2012, this horizontal line. Prices stopped cold at that line. We have divergences in place now, pretty steep divergences on the MACD and RSI against prices making a higher high. So again, even if Baidu were to make a breakout of this level, personally I would stand aside. I wouldn't take it long. I might not be shorting it, but I wouldn't take it long because of these divergences. So my expectation, just to be very clear, is that this pattern will most likely break down, and the official trigger will be a break on this uptrend line. And because the pattern is so steep, you can expect prices to probably fall pretty rapidly. And although there is some support here around the 142 level, my guess is Baidu will see the 132, 133 level before all is said and done if that pattern breaks down. Okay, folks, this has been Randy Finney with the Right Side of the Chart. I hope you found that useful. And I plan to try to get a video out on the S&P 500 top 10 holdings and I will do my best to keep that video down in length, a lot shorter than this one. Have a great day.